Hey, Laka. What's good, everybody? Welcome back to another video. It's your boy Cam here. Hope everybody's still good and healthy and taking care of their family and whatnot. So, the reason for this video is that I see that many people struggle with trading psychology, and I'm one of them. So, every year I read this book called Trading in the Zone by Mark Douglas. I never really took time to appreciate this book. That's why I'm making a part series just dedicated to trading psychology. Here's the book. I'm gonna put it right here. Trading in the Zone by Mark Douglas. If you do not have a copy, I suggest you go and get one. It's really gonna help you in your journey. So what I plan to do is I plan to summarize each chapter to make it easier for you to grasp. This video is not sponsored by the book. I just really appreciate it. It helped me to think differently and be open-minded when it comes to the world of trading and my self-development. I just decided that I need to share this with the trading community, and this is something that we really struggle with, just trading psychology. So I just want to share this with the trading community because it's helped me a lot. So without further ado, let's get into it. All right, so here in chapter one, Mans is just explaining that back in 1978, when he started trading, the only way most traders used to trade was based off of fundamentals and news release. So if they had to place a trade, right, they would focus purely on the economic conditions or what the president had said or what the GDP is, etc. So it also goes to mention that technical traders at that time were considered insane. Yeah, insane. Imagine drawing a trend line and then following it and calling it a trend. Yeah, it sounds a bit crazy. Yeah, but then they realized that it's not a sustainable way of making money. Yeah, it's not a sustainable way of making money. If you're a trader, you know that fundamentals or news release can flip a market upside down now and change the direction that you're actually trading in. So yeah, fundamental analysis is ultimately not the GOAT. Well, here Mans goes to explain that technical analysis has been around for a very long time. Ever since markets and exchanges have been open, right? As I mentioned previously, they never accepted technical analysis as a form of trading. So what he did was he got smart, right? He realized that many traders trade the markets all the time and at a certain time, and they do the same things over and over. And that obviously causes statistical predictability, right? So obviously, if somebody does something over and over and over, we'll be able to understand the behavior of that certain thing. So that's what they did. So then they realized that technical analysis could actually be profitable because as he studied the behavioral patterns of the markets, he realized that profit could be made. The technical analysis uses logic, it uses mathematics and algorithm to predict movements, right? So that allows for more possibilities on every time frame. So he then realized that possibilities of the setups on the market is actually limitless. He then realized that technical analysis is the actual truth because it keeps us traders focused on the current market and what's happening right now. In terms of fundamental analysis, it's more difficult to actually predict what somebody's going to say or what the outcome of the economic status is going to be. So it wasn't really a consistent way of making money as opposed to technical analysis, right? But wait, there's three analysis. So is the first GOAT fundamental analysis, technical analysis, or is it trading psychology, or mental analysis. So yeah, Mans goes on to get cheeky. Mans is getting cheeky, boy. But he's absolutely right. If fundamental analysis and technical analysis were the goats, right? Why did you go on to buy this book? Yeah. Oh shit. Shit. Alright, we're good. We're good. Sorry, he goes on to mention why are we reading the book right now? Why are we buying the book right now? On trading psychology. Burn! Men's got us. Men's is not playing. If technical analysis was the only thing needed to succeed, then why aren't you reaching your targets as you plan? You know how to analyze, right? You can read fundamentals well. So what's missing? The method in which you can consistently make money on the knowledge that you have. It's like when you've analyzed the market, right? And you got a setup to the T, but you don't take it. You don't take the trade, you don't take the setup. So what he calls this is the psychological gap. Analysis of the market versus the reality of actually placing any trades. The big question is, can trading actually be mastered? So let's give it a big duh. Trading can be mastered. It's been mastered 1,000 times. And I'm sure you know of a person who has mastered trading, and someone that you look up to, or that's your muse in the market. We need to actually understand the nature of trading and how it ties into us as people. So let's ask this question. What is the difference between you, a struggling trader, and a trader that has mastered the markets? Anybody who learns to trade right now can possibly find opportunities in the market. If I teach somebody now how to look for a head and shoulders or a ascending channel within the market, they'll be able to find it easily. And anybody can analyze the market with knowledge, but not everybody can trade the markets. That's the thing. So what is the difference between the best traders and those who are actually struggling? Let me tell you. You haven't learned to think like a trader yet. Period. Let's elaborate. So according to the book, right, consistent winner characteristic consists of two things. Number one, it's your winning mindset, and number two, your attitudes. That sounds very mediocre, but it's not just normal attitudes. It's attitudes that allow for discipline and focus in spite of what's going on around you in life. Attitude is important. It will determine whether you actually make consistent wins or a lack thereof. This bra actually goes on to say, once we pass the level of doom, which is extremities of heavy emotional and financial pain. You sold your car to fund your account, to be rich, and now you blew your account. There goes your car and your money. Now you must sell your ass again. Aye. And it's not our fault. This is how we've been trading because we never had the proper guidance in our trading careers. And let me tell you, toxic trading is the hub here in SA. SA is the toxic trading hub, boy. So ultimately, we haven't had the best guidance. But not to worry, we're going to change that. So let's dig a little bit deeper into some of the best trader characteristics versus the ones who actually struggle to make means, right? So we are different people. We all have different perspectives, values, and attitudes. And we're all made differently and we're all raised differently, right? But luckily, we all have the means to develop the skills involved in understanding what it means to be called a good trader. Let me ask you this question really quick. Can you call yourself a risk taker when you put on a trade? We would applaud ourselves in pride and say yes. Ultimately, yes. But have you actually accepted what the outcome would be of that trade? Have you actually accepted the risk? Have you actually accepted the outcome of? What I mean by that is there's no guaranteed outcome in these markets. Have you accepted that? Have you accepted that if you have to place a trade now, you might just lose $200. You might just lose $2,000. Have you honestly, truthfully accepted that fact? No, you haven't. Let's have a trade like that. Because you haven't actually accepted the risk. Yeah, so actually we're out here flexing that we're risk takers and okay, that's good, it's just a step, but ultimately we're not accepting the risk, so we're not risk takers. We're fearful of the markets, right? In the words of great Marky Boy here, he says, the risks in trading do not cause the best traders to lose their focus, discipline, or confidence. So we can agree that he sold us on number three, right? The ultimate GOAT is mental analysis, aka trading psychology. Trading psychology for the win. So, trading psychology is ultimately the most important. We'll be able to trade more freely, fearlessly, without hesitation. How do we remain disciplined, focused, and confident in the face of uncertainty? It's simple. The most important skill you need to learn is how to accept the risks in trading. The most important skill. Because when we analyze the market and we generate possibilities and setups, it won't be painful any longer. As a trader, I'm sure every trader has gotten into trades late or too early, or has not closed a losing trade, or turned a winner into a loser, didn't take profits, left money on the table. I'm sure as traders, we've all been through this, right? If you have agreed on every single one of that, we understand that the market is ultimately neutral. We are ultimately the ones who jeopardize the opportunities given to us. Let's repeat that again. The market is neutral. The market moves according to algorithm and the information that is collected about itself. We as traders make the errors. We the ones that result into faulty trading. We can analyze a perfect setup and say, yeah, we're gonna buy then, we're gonna sell here, or whatever. And then we just do that. Because ultimately we didn't have the proper guidance in how to develop the proper attitudes in order to trade, right? We need to develop attitudes that make room for focus, discipline, trust, and confidence, and to leave fear outside. Ultimately, it's about healthy attitudes. We need to develop the attitudes needed for trading. Attitudes that keep us from doing reckless things in the market, that keeps us disciplined, that keeps us focused. Because we can all experience a no fear type of day. But then we tend to get reckless. We put lot sizes down, size of the house. The account is so small, Boma $5. You wanna put a 10 lot there. Hold it. You can't park the car there. We tend to get reckless because we're no longer fearful of the market one day. So that's why we need to develop these attitudes that allow us to be consistent in the way we trade, and we need to have a flow. It needs to be a flow. To develop attitudes that allow and encourage us to be more structured, focused, disciplined, and risky within our honest means. Don't over leverage. So means don't over leverage. 95% of that stock trading because of our attitudes about being wrong. When it comes to trading, take fear and chuck it out of the window. Fear fogs our decision making. We're afraid of being wrong, right? And then our perception of the markets are distorted. We have this, what you call this, analysis paralysis. Then we freeze or we run. And then information ultimately gets blocked and our rationality is like, Joe, if I took that trade, error, I was right. No, but you weren't right because you didn't get in, bruh. You can analyze the market, anybody can analyze the market. But to actually trade the market, it's another story. It's hard to understand that the source of our problems is actually us. Learning to analyze this market is one part of this trading thing. Learning how to analyze more and practicing is good, right? But it's not going to override the fact that you actually need to keep your psychology in check. There are way too many variables of the market for you to want to grasp every single aspect of it. I'm going to leave you guys with this. Find a profitable strategy that's going to help you personally. Then wire your attitudes to fit with that strategy. Then you'll create a structure and your psychology will be good. Easier said than done, but I hope that you guys learned something in this video. If you have any questions, leave them down below in the comment section. Don't miss the next video, guys. We're going to get the psychology thing right. Cheers. Happy trading. I don't know what the hell you say, but away. Short Owens.